In this episode of Advisor Revelations, hear how RIAs can generate guaranteed income streams by using commission-free solutions and tools to help discover new strategies and determine client investing styles.
Welcome to the Advisor Revelations podcast. I'm Ross McGoodwin, a Regional Vice President at DPL Financial Partners. Today, we will discuss how advisors are using annuities in retirement portfolios to provide a guaranteed income stream for their clients, especially now more than ever. This can be especially useful for retirees who are looking to protect their savings from market volatility and ensure that they have a steady source of income in retirement. Joining our discussion is founder and CEO of Simplified Wealth, Andrew Lippert. Andrew, thanks for joining us today.
Hey, Ross. Thank you for having me.
Absolutely. Well, before we dive in, really excited about this today, but I want to remind our listeners to please subscribe to this show on your favorite streaming app for updates. If anything we discuss today piques your interest, you can also connect with a DPL consultant on our website, which is dplfp.com. All right, Andrew. Well, Simplified Wealth came on board with DPL during 2022, and you're fairly new to the platform, but it's fantastic. We've already seen so much, collaboration on client situations and introducing new topics and solutions out there. But tell us a little bit more about yourself and your firm before we get started.
Yeah, thanks, Ross. So I started at Fidelity Investments back in 2012. I was at a regional call center for about 7-8 years-ish. And then for 2 years, I was at a small local RIA wealth management boutique shop, that type of thing. And I got to this point of wanting to launch my own planning firm, having the CFP kind of the centerfold, and then having the investment side of it with the CFA and then the enrolled agents, the tax. So that's Simplified Wealth, trying to give people one place to go to kind of knock out all their financial needs, if you will. Which the flip side of that coin was I found that to be the easiest way to add value was actually integrating all of those moving parts together. So DPL came in to be a big part of that, really, to help execute on the insurance or guaranteed income side of things, because I would think of it as nothing more than another pension or Social Security type instrument for people who don't have that from other income sources and need it or want it, but done in a good way. So stripping out kind of all the negatives, stigmatisms that come with the annuity side of the world. Because frankly, I haven't had a lot of those. So that's where I landed on the DPL relationship or strategy side of things.
Yeah, no, that's terrific. And I'm glad, of course, we could be that, partner and solution for you. And you, of course, mentioned that you wanted to take a completely holistic approach to helping clients. You thought that'd be the best, model for you and most compelling to clients. Part of the trade-off, though, is that historically, if you're going to be fee-only fiduciary, a lot of these solutions are completely off limits, right, with annuities and guaranteed income. So what made you or sparked the exploration of a partner in that space? Was there a certain client that came up, or what made you think, okay, I want to be holistic, but there needs to be a partner to solve for these needs?
Yeah, probably really started, honestly, with my dad back in the day when he was looking at retirement. So his story was he was a physician in a small medical practice, 4 or 5 guys or whatnot. And when he went to retire, really the only guaranteed income he had was Social Security. They didn't have a pension or that type of thing. So it became really looking at the whole, not throwing the baby out with the bathwater. Sometimes adding some guaranteed income is helpful, but the problem is it's very hard to find it without being obsessively worried about what landmines you're stepping on and the products you're buying and what's hidden behind them. So DPL gives you the plus side of solving that challenge and strips away a lot of the negatives that previously came with it by bringing transparency to the table around the products that are out there available. And having one dedicated consultant has actually been a big part of it too, because there's bazillions of these products out there. So to do due diligence the right way on what somebody either already owns or is looking for is really hard unless you have a way scalably to look at everything transparently.
Yeah, no, 100%. I think that having a dedicated human that you can work with is important, and a dedicated team. Right now you're working with, of course, myself, but also Joel as the internal consultant. So it's been great working as a team together. But going back, what were your initial thoughts when you first heard about DPL and how we're working with RIAs? I know it's a newer concept still to a lot of people out there, maybe the other communities that you partner with. So I was just curious what your initial thoughts were and what made you maybe go over the edge and say, yeah, DPL is the one for me.
Yeah, I think really seeing that your business model is dedicated to serving this really niche concept. It reminds me a little bit of, I actually did some hourly work with XY Tax Solutions last tax season that has a similar concept as offering to the financial advisor space, but in tax preparation services. And so it's a way where people can still get their hands into these different tentacles and areas of a financial plan that can be pretty broad, but staying scalable. And unless you have that structure, it's just going to be impossible to really give your clients the due diligence they deserve, at the same time not bogging yourself down with frankly things that Ross and Joel work with me a lot, and they know that I can't keep in my pea brain all these different jargon. It's a whole nother language in the annuity world, just like in the investments world. So just having that consistently repeatable approach, it was the only way I was going to be able to scale the business model the way I want to, of really delivering that whole investment, financial planning, tax, estate planning. I can't do all of those things unless I have really good strategic synergies, basically.
Yeah, no, I think that's really important, and we're really excited now that we can deliver on all this in a more scalable and repeatable way. So no matter if you're a one-man shop or if you're a firm that has 20 advisors, having a scalable and repeatable approach is important because it saves time, but also ensures that it's going to be more of an objective process. So I know early on we went through the guaranteed income analysis tool, and for those who aren't aware, we have a tool where you can input the situation you're working on, and maybe it's for guaranteed income immediately for a 65-year-old, and then we'll rank the options that are the best fit. No preconceived notion, not rigging it towards one carrier or product, and that's been, I know, really nice to deliver for all types of firms. So it is scalable and repeatable. So I know we went through that early on in the demo.
I was just going to say a couple of points on that. One thing that really I appreciated, as well as a current client of mine already mentioned, was I think you guys have looked at least 70% of the clients I'm working with now. At least you've looked at least 70% of those people's profile, whether they own some type of insurance or annuity or whatnot, or it would make sense to consider it. You've looked at a handful of them, and you haven't every time come away and said, yes, we have the magical solution. So that was actually, to me, I like hearing that, because then I can trust when you do have a solution, it is indeed a solution that's helpful. So for me, it's been a really easy way to do due diligence, even if it's as simple as, hey, they got this annuity policy they bought 10 years ago. Can you just take a peek? Just, at a minimum, the old college try, right? Because I don't dig into that world as much. And that was the first one specifically we actually ended up taking action on, and it had a pretty meaningful impact for that client. And that was a really good first experience, because if I'm being honest, besides putting the ball in y'all's court and giving you the account statements to assess, is there a viable, better product out here, all I really had to do was handle a TOA after that, and it saved that client. It was like a $50,000 cash value of the policy, and lifetime, if this one client lived to another 20, 30 years, which is totally conceivable for that person, it added, I forget what it was, something like 50 or 70-ish thousand. Yeah. And so it's like, it really didn't take me that much of legwork because of the way the system's set up. And if you build that rapport with people like y'all, so Ross and Joel both know my personality and kind of how I look and assess these things. So then you have it and you work with, like clockwork, you get an actual flow and rhythm.
Yeah, no, that's great to hear. And, that's part of the thing we're passionate about too, is, not every situation is going to make sense to replace if it's a current policy, or certainly, considering annuities for the first time, not every client is going to be the best candidate. And we'll be the first to tell you, when that's the case. And that's super valuable to have that information as well as a holistic planner, to have the confidence that, okay, maybe the path we're on still makes sense. If it makes sense to have a different path, we'll tell you, why that's the case, and how we're going to be able to execute it, and what the savings might be, or what the improved efficiency may be from an income or protection standpoint. So we're definitely on the same page there when we work together about, hey, sometimes the right answer is stay put, and that's just as valuable as also making a change. But when we go into, and thank you for sharing all that, but, thinking about, operating as a true fiduciary, you talk about, you provide true, independent financial planning. What's been the process to introduce annuities to clients? I'm sure maybe that's changed a bit in the last 6 months, but how have we helped maybe get that conversation started from an objective standpoint and maybe leveraging the partnership to make that easier?
Yeah, so it like always depends on the situation. If I grouped it mentally into kind of the two buckets of the profiles I often end up working with, it's kind of that young working professional like you and I, right? People in similar phases of life that I'm currently going through. So I was over time having a lot of friends ask me to help with their finances. So it'd be kind of dumb not to make that one of the core clients that you help with. But the other side is in that pre-retiree to early retiree phase because of a lot of the experiences I had at Fidelity. With all clients, day one, I like to obtain their tax returns, their actual statements, including any insurance policies they have, to at a minimum give you all a shot to look at them. So step one to me is just creating awareness. Say, hey, what do you have? What is it currently doing for you? Blah, blah, blah. Doesn't necessarily mean you'll do anything with it, but you want to create that baseline awareness first. But then the other side of it will be if they don't have any annuities or insurance policies yet, and they're that pre-retiree phase, that's where I kind of step on the gas pedal a little bit more, if you will, and really run through the RISA tool to quickly get an understanding. So I have one person right now, she's to be retiring at some point this calendar year, has no pension, no type of income, guaranteed income stream coming her way beyond Social Security. And she wants a little bit more. So just getting them exposed to using the RISA tool to quantify and show them the results of letting the chips fall where they may, to make sure they really understand how does it help them potentially solve for retirement in the way that they want. Because everyone can be different. I use the comparison, and this is where the RISA tool can help a lot. I use the comparison of like when I bought my first house, mathematically, everything said that I should take out a bigger mortgage. And all the CFA nerd friends of mine, you should take a bigger mortgage. Why are you putting down so much? Yada, yada. I said, because I've done the math and I agree with you mathematically, that's correct. But what you don't know is that I will be staying up till 4 a.m. and have a heart attack at age 45 if I have the debt, because it'll just weigh on me mentally. So you're allowed to, I think our industry sometimes confuses behavioral finance and wants us to almost ignore it. I don't say ignore it, become aware of it so you can manage it or potentially listen to it. It's okay if you, so I bring that up because sometimes clients will, hey, I don't want an annuity. I want everything in the market. I'm totally comfortable with risk, yada, yada, yada. And then you kind of sometimes might run through these risks tool and you look at it and you kind of in your gut know, I bet they'll come out with results that maybe surprise them a little bit. And so far, it's been spot on with all the clients I've used as to what I've expected their results to be. And the one that I've found it helpful is her first thing she said to me after was, I guess I just really never actually thought about it. I just knew the horrible stigma they had, right? So I think it helps to strip away the emotional baggage that might not allow that person to take the first step to just explore it. And at the end of the day, if you don't do it, that's okay. But let's make sure you fully comprehend it, because frankly, I'm just as guilty as clients a lot of times because of what I've seen in the annuity world. I'm always a little like, I don't know. So like for me, it was helpful in even removing my own bias or keeping that in check of, hey, an annuity may make sense for this person. Like, remember, they're not all horrible, Andrew. Sometimes there's some good apples.
Yeah, no, that's fantastic. And for those who are not familiar with the RISA, it's a really unique strategy and solution that Wade Pfau and his group, Alex Murguia, they help put together. That's essentially a survey for clients they can take to self-identify what type of income experience they would like to have. And I think it does really help put down those barriers to have clients just be honest. And it's an objective process. And to your point, it also helps with maybe the bias of the advisor going in. Most advisors historically have either said no one gets an annuity, or they're the other extreme and says everyone gets an annuity. It certainly should be somewhere in between. That tool I know has been instrumental early on, and it's a resource that as a DPL member, you get access to on a complimentary basis. So I know that's been also an integral part of how you've introduced this space as well. So I'm really glad that you're putting it to good use. And it sounds like it already added value to a lot of conversations.
Yeah, and in case anybody's curious out there, because I know we can get inundated with the tools that are available out there in the world, but one reason, I really like this tool was because, these tools can be cheap and free, right? And if we're not careful, we kind of can throw out the really valuable ones in lieu of junk ones, if you will. I really believed in this out of the gate because of Wade Fowle backing it up. So if you just Google Wade Fowle and look up some of what he's been about for years, I saw him speak at Fidelity to the insurance group, and I was at the time on the fixed income team, kind of squeaked my way into this little seminar they had. And point being is he's dedicated really his life to kind of solving this academically. He didn't have the vested interest of like, I'm going to create this tool to spit out my firm's product. You're going to buy this annuity, surprise, magical solution as you buying what I'm selling. So it's really an unbiased but very thoughtful academic tool that then you can take away practical solutions and then say, okay, DPL, what should I do with this? Like, this is saying these are two solutions that may make sense for this person. What does the broad market look like on y'all's platform that's available to you for that? Versus, here's the only product that can solve all your world's problems.
Yeah, no, absolutely. And it was really rewarding. I actually got to work with Wade and his team a bit on mapping which solutions make sense for what type of client or income experience. So it was really, I think, exciting to hear that you already knew about this tool before we even really started working together. So that made it even easier for us to start talking that same language with these resources early on. And one of the solutions that we did use so far was a fixed index annuity that had a guaranteed lifetime income rider. Maybe something you've never looked at in the past, but given the combination of downside protection and lifetime income, it's something that was a great fit for the client. So I guess talk the audience through that experience with that solution and why that came out.
That was really easy because they already bought the product. I think it was 10-ish years ago. And not to downgrade myself, but literally basically all I did was, I'll admit, I was kind of like, it's got 50-ish thousand value to it. What more could I really do? They already bought it. It's kind of, I was kind of thinking it's probably sunk cost. It's probably not better. We could just turn on the income rider it had. They've already kind of took it in the teeth on these fees over the years. It is what it is. But something in me said, you know what? No, this is why you partner with DPL. Kick them the statement. Just ask them. And you don't know. This is the point of why you're partnering with them. And it came back that literally basically just switching out, keeping the same product basically, but just switching it out for a significantly better one. I feel like it'd be like a snake shedding skin. It's still the same snake, but we got rid of the old junky skin. So those are the no-brainer layup wins. And that client didn't even, they kind of looked at the paperwork for 2 minutes and said, yeah, why wouldn't I do this? And, yeah, why wouldn't you, right? Like, you stripped out a bunch of the fees. It added a cost of living rider, which it did not have before. It had a long-term care multiplier to it. There were just multiple reasons of why wouldn't you do this? Like, so, and I think of that as a kind of an environment of, I think John Vogel and what he did in the investment world of indexing for passive versus active, I think DPL is kind of just another rendition of the ripple effects of that. Like, it's transparency, it's low cost, but getting the steak and potatoes done because that's what matters. And like a lot of times, it's very easy to get distracted on the 5% of what matters and lose sight of the 95 that does. And by the way, the 5% cost you 100 times more.
Right. No, exactly. No, it was a great situation there. Lower fees, add protection, add a cost of living adjustment, and the opportunity for multiplying that income in a long-term care event scenario. So it was on paper maybe seemed like a long shot, but then we come back with a better solution. It's always rewarding, surprising advisors. These solutions have been completely restructured, repriced without commissions. They're way more compelling than they ever would have been before. And we'll introduce new solutions that maybe you never would have been able to find in the past. So that was fantastic. And then I like your analogy there a bit that you just provided. But on top of that, I know David has been thinking, the time for annuities for RIAs is coming. And he equates it to maybe, a long time ago, not that long ago, but, earlier in, mid 2000s, ETFs starting to come out. And at first everyone's like, oh, this isn't going to work. No, mutual funds. Well, obviously ETFs now today are very efficient, low cost, utilized widely. And we think that's what's coming next with annuities. So really excited to see how that develops.
And I'd say that's spot on to that whole kind of the John Vogel playing through to the industry would agree exactly with that. Because if you look, everybody now loves John Vogel and Vanguard and all this, right? Like it's easy to write about in the industry. People love that. Well, that wasn't how it started. The industry hated him. Most people hated him. His firm, I think Vanguard was unprofitable the first 5 years. Like everybody, basically, he went in, Trojan horse into the industry to fight for the little guy. And yeah, of course, no one likes that initially, but they'll adapt. They'll get on board, and the better ones, the better advisors will learn to leverage these types of things for clients' better outcomes. And so you kind of either get on board with it or you're like, it's coming.
Yeah, no, absolutely. And I think a year like last year was obviously a difficult one for clients and for advisors, but it also was, I think, an important year because it helped, I think, advisors and clients take a step back and start maybe considering new strategies for the first time. And I know I've talked to advisors who maybe only thought they'd use us in one way or the other, but then now they're taking more of an open-minded approach. And part of it's been, hey, there's more pressure now to add value for clients and to rethink how we can be standing out versus other advisors and stay competitive and stay on the front end there. So I do think it was an important year just to kind of reset the playing field and figure out what are the best strategies we should be including now.
Yeah, and I think I'm still learning this with you guys right now. Even like actually earlier today, I was talking with Joel, and I don't know if you guys are still. I guess it's kind of newer in the phase, but some type of thing that for exec pay with VULs. If you have a client who say has a 457 option of deferred comp, but maybe they don't want to go that route for certain reasons of forfeiture of those assets. Like, what does a VUL look like? So I guess they're working on even an institutional type plan for those types of clients. And I didn't know that. And then I just happened to bring it up today. And so, yeah, it's always little extra ways that are helpful.
Yeah, for sure. We with our approach and bring on a new advisor, we're not going to try to do everything in the first week or even first month, right? There's so many aspects of financial planning and these solutions and advantages we can introduce. So it takes time to do diligence, but that's why we work together on what are the problems you're trying to solve for, and then we'll go find the right solutions that for that criteria. So sometimes it's leveraging technology and it's instantaneous. Other times, it's going to involve maybe some advanced planning. We can do it all though, and that's what's been really, I think, rewarding there. I guess just thinking about income, just taking a step back on that topic real quick. How did you approach guaranteed income in the past, without annuities? It sounds like you looking in to see if they had a pension, of course, but were you using mostly a total return approach? Would like to hear what you did historically and maybe how you think it's going to change now, maybe supplementing that strategy maybe with annuities.
Yeah, I don't know if it'll necessarily change as much as it'll be easier and more consistent experience for a client, right? Because we're all humans. So what it does is like my approach to a lot of it stemmed from experience at Fidelity, working with the employer side of plans. And so I was working with participants in 401k plans, with pension plans, equity comp. So you kind of get to that. They're in the fourth quarter of the game. They come to you, hey, we want to retire. Now help me develop this income stream. And that was kind of our job. So you would look at the whole retirement income planning, which the easiest part, you're just saying basically your expenses, what's your expenses versus your income. And so then you're grabbing their Social Security or pension plan. And if there's a gap there, then it kind of became a conversation of, I'd say, two parts of what's your just preference or style, that going back to the mortgage part of it, like maybe mathematically we can run numbers and see that you don't have to have it, but if you want it to feel more comfortable, that's okay too. But then there's other people where it's certain things are going on and you should increase this floor. So that's how I philosophically would go through it previously. And you could look at numbers on the income planning and expenses and all that and the financial planning tools. But I think what RISA just does a really good job of is basically creating a very repeatable framework, like bumper lanes. If you can't tell by my brain, sometimes I can get a little scattered. So it forces you down the path that you're wanting to go down every time anyway. And, my parents they are private pilots. And so I remember one thing growing up, like my mom's crazy, right? And so, but she's always late for everything. But one thing she would never skip over, nor would my dad, because they're both pilots. You'd be sitting on the runway, pre-flight checklist. So you have checklists for everything when you're pilots and in the physician world as well now. And there's a reason. It's because we're all human, and you don't want to be that pilot who lands with your wheels up because you just didn't have a simple checklist. Check, 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 check. So like at a pilot, one person will read the acts and the other person does the actual activity as they check them off. And so it just ensures that versus well, damn, I wish I'd asked that this one time. It just kind of slipped my brain. Oh, well, sorry for Miss Betty's retirement, right? Like, why not ensure that?
Right. No, I think I like that, that story there, that example. I think another angle to this too is I think a lot of advisors assume, well, annuities are for my clients that, are going to run out of money or at risk of running out of money. Now, an annuity might help improve probability of success or Monte Carlo score, but it's also about maintaining lifestyle. Nobody wants to have a situation where they're spending less year basis because, the market's down, so you're not going on vacations for the next 2 years. That's not a fun conversation.
To that exact point, like to me early on, when you're really getting to know a client, part of that conversation should be heavily on, okay, like when I'm in this financial planning software and I'm checking off that your withdrawal rate or your dollars withdrawn, you will be flexible with them. Like, I mean what I say here, like, let's be really serious, because when the market's in the crapper and you have that vacation you really wanted to go on, I don't want to at that point hear you say, yeah, but just this one time, because eventually that'll hurt you. So it's okay if you don't want to give that up, but let's be realistic about it up front. So we set a plan in place, and, an annuity or what. And, to that point, like I said, my dad was a retired physician, ER nurse, like they're blue collar salts of the earth people. Like my mom will complain when you drink the nice vodka. Grey Goose is imported, I'm like, Mom, this is 2022. It's not that hard to get. Anyways, they're not trying to blow money on anything. But with that said, and they live in small town USA, no cost of living. But I can tell you, my dad loves his annuities. He always mentions to me when the market's down, well, at least I got those annuities. And he doesn't need them per se, but so that's where the style comes in. Like, it's okay if Jeff Bezos feels better about having an annuity, he's allowed to have one.
Yeah, absolutely. I definitely think there's a preconceived notion of it's only, a certain type of client or net worth that's looking at this. No, it's really just about what makes the client comfortable, and also an advisor, what makes you comfortable. If more of those non-discretionary needs are completely planned for with guaranteed income options across Social Security, across pension, and maybe the annuity, then the rest of the plan becomes a lot easier to be able to manage, and you can be more flexible or maybe be more aggressive, and that has a ton of value. And that's not always something that I think advisors and clients are thinking about. So it's fantastic to see that you are thinking practically about that to figure out the style with every client.
And to that point, this was a real life example of using the RISA tool with a client that I would say for the most part is comfortable with kind of the total return approach. They could fall either in between, more income or not, like kind of more preference based, but they have a ton of their market portfolio concentrated right now. And so if you're going to go the route of I'm good with total return risk, you can't do it and be that concentrated. So like either let's diversify this that you've had a hard time selling type thing, or we need to really look harder at adding some guaranteed income. Because if the CEO of that company decides to make some stupid Facebook post one day, you might, how badly do you want to go on that Florida vacation? Is that a risk you want to take?
Yeah, absolutely. There's a lot of risk in that they got to be comfortable with. And many clients are. The stats are 33% of clients are total return. But there's a whole another 2/3 that are interested in some combination out there. So of being in the market and having income come from a guaranteed source. So I think it's great to identify that there. And then looking big picture, we introduced some new solutions like the fixed index annuity. We've looked at commission-free VUL, of course, but what solutions have maybe stood out, or maybe what surprised you of I didn't know these options were available in terms of working with DPL?
If I'm being honest, don't take this as a bad way, Ross. You're awesome out of the gate even. But what's been most helpful has been that dedicated relationship, working, whether it's with you or with Joel. Joel's been awesome, really helping me take whatever findings we kind of find, whether it's through RISA or through the tools on the website or emails exchanged back and forth of, hey, here's some ideas, here's some initial observations. He's gone that extra effort, even hopping into, my screen sharing and then helping me embed the comparison in the actual Right Capital. So whatever people use, Right Capital money or whatever, Joel's been nice enough to help me embed that in there. So then I can actually say to a client, not just, hey, here's all this annuity mumbo jumbo, but here's a net number that's showing what the difference would be if you did A versus B. And it kind of makes it for those people a real no-brainer. But as far as like the technical tools, because that's how I think of it, is like you're getting two things. You're getting a strategic relationship and then you're getting a better platform, basically. I found that income tool, helpful just to, when you're on a call, to out of the gate, show somebody a rough idea. Hey, what would $100,000 get you? Or whatever. And even just screen sharing it with them. And when they see that it's coming from results of different carriers and things like that, that to me starts to immediately make them more comfortable, because going back to how the whole business model is set up, you can't really give unbiased annuity advice if you're an annuity agent who you only work for Pacific Life. Guess what product you're going to get? Ding, 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 a Pacific Life policy. Nothing against it, but like you're never going to get it. How can you possibly get unbiased advice when the people who are paying someone's paycheck, you're going to only work with that company? So it's kind of a good way to, I guess, transparently show them, walk the walk a little. Yeah, I've heard this before, because I think that's where the challenge comes in, is like, all these things sound great, but our industry's done a great job of saying things that sound great for decades. So like almost somehow getting them just to taste a little bit of, hey, this your experience isn't wrong, nor is it, nor am I saying you're lying. In fact, the opposite. But like, there's a better way. You just got to taste the cookie.
Yeah, no, for sure. I mean, the guaranteed income analysis tool, we think is super important and transformative to having a lot of these conversations around income. So encourage everyone to go check that out. If you register at dplfp.com, you can get access to utilizing this tool. And to Andrew's point, you could plug in a dollar amount to see how much cumulative income you can create over a client's remaining lifetime, or you could reverse engineer it. You could say, hey, we're looking for $3,000 a month in income. What are the options we can look at? How much can we expect to put in as a potential premium? And the tool will rank them accordingly. So great to see that you're using the tool. That's why they're there. I mean, we use it internally, of course, but it's meant to be a great tool for advisors, because in the past, it was what you described. Hey, I'm going to go directly to one insurance carrier, and maybe it's the best option, or maybe it's not. Or you go to someone who's commission driven, and that creates a whole different situation where now you're sending out assets out the door to someone who may have good intentions, a good experience with your client, or it could be something quite different. So we want to empower RIAs, fiduciaries like yourselves to be able to have those tools and those conversations. No, Andrew, thank you for being a great partner. Always really open to new ideas and talk things through, and we of course appreciate that. So excited for the rest of the year, and excited for the listeners to learn about your story here. But thanks for being on today, and we look forward to talking again here soon. But reminding the audience that you can connect with us at dplfp.com and subscribe for more episodes anywhere you listen to podcasts. So Andrew, thanks so much.
Thanks for watching. Visit dplfp.com to learn how we can work with advisors like you. And please, for more updates, subscribe to this channel.